For anyone investing in real estate professionally, each ownership structure comes with its own way of managing properties, handling taxes, and dealing with legal risks. Just one small mistake could mean losing valuable tax savings or getting stuck with legal obligations you never wanted. 3 common ownership structures: LLC, partnership, and corporation. These structures are very common among professional real estate investors in the US, people who buy multiple properties to rent out, run Airbnb businesses, invest in commercial projects, or partner with others for capital. However, each structure comes with different management requirements, tax treatments, and legal risks. So, let's start with the first one. What exactly is an LLC? What is an LLC? Key asset protection benefits. An LLC, short for Limited Liability Company, is one of the most popular choices among real estate investors. The biggest reason? It protects your personal assets. If a tenant slips and falls, or there's a lawsuit against one property, only the assets inside that specific LLC are at risk. Your other properties in your personal name stay completely safe. It's also flexible to manage. You can own it yourself or with partners, and if you ever need to add or remove members, you just update the operating agreement. No need to change the property title. That's a huge time saver if you work with different investors over time. But there are a few things to check before forming one. If your property has a mortgage, you may need your lender's approval before transferring it into an LLC. And since each state has its own tax rules and fees, it's smart to talk with a CPA first to make sure you're set up for both compliance and maximum benefit. How an LLC optimizes your taxes. From a tax standpoint, LLCs are smart because profits and losses pass directly to the members' personal tax returns, avoiding double taxation. You can deduct expenses like mortgage interest, maintenance, and repairs, which legally lowers your taxable income. And if the owner passes away, properties in an LLC can still receive a step-up in basis. In a single-member LLC, that's applied fully. In a multi-member LLC, only the deceased member's portion is adjusted. Key points you shouldn't miss about LLCs. So to sum up, first, an LLC helps protect your personal assets, offers tax flexibility, and is easier to manage than a corporation. It also makes profit sharing simpler if there are multiple members. The drawback is that you still have to pay annual fees. For example, in California, there's a yearly payment required. Some banks have restrictions about transferring a property from personal ownership to an LLC, and if the LLC has multiple members, you need a clear agreement in place to avoid disputes in the future. They're ideal if you own multiple properties with higher legal risks, or if you want to group assets under one entity to attract investors or split profits easily. What is a partnership? Capital contribution and profit sharing. A partnership is when 2 or more people share ownership, benefits, responsibilities, and risks of a property. There are 2 main types. In a general partnership, everyone has management rights but also unlimited personal liability. In a limited partnership, one person, the general partner, runs the show, while the limited partners simply invest capital and aren't involved in daily operations. A practical example: 3 people join forces to buy a commercial building. They agree that Person A will take the lead as the general partner. Persons B and C will only contribute capital, so they're considered limited partners. Person A is responsible for management, handling leasing, maintenance, and legal matters, while persons B and C simply receive their share of profits based on their capital contribution. The big advantage here is flexibility. You can split profits based on capital, effort, or any formula you all agree on. And one more thing is you're not facing risks alone. If the market dips or an unexpected repair comes up, the burden is shared. Plus, partnerships also benefit from pass-through taxation, so you avoid being taxed twice like in a C-Corp. Conquer risk management in a partnership. That said, partnerships can get messy if you don't set clear terms from the start. Who manages the property? Who decides on selling, refinancing, or renovations? How do you split profits? What happens if someone wants to leave? All of this should be in a signed agreement to prevent disputes later. And in a general partnership, you could still be personally liable for your partner's actions. So in some cases, combining a partnership with an LLC can be a safer route. Corporation structure, the perfect fit for large-scale real estate investing. Corporations, whether C-Corp or S-Corp, are more formal. They have shareholders, a board of directors, and operate as separate legal entities. This separation means company-owned assets aren't affected by a shareholder's personal liabilities, And personal assets aren't affected by company issues unless there's fraud or intentional wrongdoing. This is especially important for large-scale projects with high risk. In addition, a corporation can leverage advanced financial strategies, such as issuing shares, securing higher credit limits from banks, or partnering with investors through equity contributions. This opens up greater opportunities to expand a company's asset portfolio and scale its growth more quickly. They also keep operating even if a shareholder passes away, there's no probate, and assets don't get frozen. Changing the beneficiary of shares can be done more easily without affecting the assets owned by the company. Overall, corporation ownership is highly suitable for professional real estate businesses, investors holding multiple properties who want to protect their personal assets or separate assets for each company, as well as foreign investment organizations looking to establish a presence or collaborate on investments in the U.S. The drawbacks of corporation you can't ignore. Corporations aren't without downsides. They're more expensive to run, with legal, accounting, and compliance costs. Assets inside the company don't get a step-up in basis, so if the company sells a property, it pays full capital gains tax. And with a C-Corp, profits can be taxed twice, once at the corporate level, and again when distributed as dividends. Besides, decision-making can be slower because major actions must follow internal corporate procedures. Now, let's wrap up these 3 ownership structures so you can have a clear overview. Summary: choosing the right structure for real estate investing. First, in terms of legal protection, LLCs and corporations offer it, while partnerships are more limited. When it comes to the step-up in basis, LLCs can have it if they're set up as a single-member entity, and for multi-member LLCs, only the portion belonging to the deceased member is stepped up. Partnerships can get it partially, but corporations cannot. Profit sharing? All 3 structures handle it fairly easily. As for legal complexity, corporations are definitely the most complicated, with more parties involved and stricter regulations. In terms of suitability, LLCs and partnerships work well for smaller-scale investors, while corporations make more sense for large-scale investments where clarity and formal structure are critical. Of course, this also comes with higher costs, so it's important to evaluate carefully with your CPA or attorney. To sum it up, if you're buying 1 or 2 rental properties, an LLC is safe, simple, and tax-friendly. If you're investing with others, go for a partnership, just make sure you have a solid written agreement. And if you're aiming for large-scale, fully professional control, set up a corporation. No matter which route you take, talk to an attorney, a CPA, or an experienced real estate advisor first. One wrong move can cost you valuable tax benefits or lock you into legal commitments you didn't expect. If you found this video helpful, make sure to like, comment, and share it with anyone who's learning about buying a home or investing in real estate. And don't forget to hit the follow button so you won't miss my latest videos. Thanks for watching, and I'll see you next time.
Real estate and mortgage broker Danguard, with experience in over 1,000 loan applications and real estate transactions, aims to provide you with useful and general knowledge about this field. For advice on each specific case, please contact via email or website provided below the video. Don't forget to click like and subscribe to the channel to stay updated with the latest information from Danguard.